Welcome back to the Mike Rosehart Show. Today was Jerome Powell raised interest rates 25 basis points today, which is exactly what the market was expecting. He sort of towed the line. He said we're going to have no, for this foreseeable future, no rate decreases. We're going to have more rate hikes with an S, meaning multiple. The next one's in March, and then after that, probably into June. And the stock market's had its best, the NASDAQ has had its best month in 22 years. The last 30 days, the market has rallied over 13%. In the after hours, Meta delivered earnings. They actually missed on earnings. Their earnings were bad, but still they were able to rally 19%, 20% after hours. The market is rallying to all new highs, and I'm short. I'm short 2-1. Oh my goodness, that light bulb is really annoying. Hang on a second, guys. Killing me. We're just gonna do it in the dark with that light off. Sorry about that. There's a light bulb in the hall here, and I turned it off because it's tripping me out with the strobe. Oh, I don't. What are you guys doing? What's been going on in your world? Any live questions? Put them down below. It's been unexpected. I was long and I sold everything mid-January. I'm like, wow, we're getting quite a rally here. I don't see how the bear market's over. We've retraced everything, all the losses the last 6 months, 7 months of this recession, all gone. We're now like tracing into some new highs. It's I sold my shares in Meta, unfortunately, for other reasons, not because I actually don't believe in Meta. I love Meta. I think they're an amazing company. I will see them at $300 a share in the next couple of years, 100%. I love them. They are the powerhouse of social media: Instagram, Messenger, Facebook, WhatsApp. I mean, they control how we communicate for the most part. So I love the company. A lot of great things they're doing. I think it's too soon to buy the dip. And again, the general advice that I would give anyone who's joining my channel, who's like, how do I start investing in stocks? I'm like, just start buying every month consistently, dollar cost average. But I don't do as I say. I don't follow my own advice. Here I am shorting 2-1. And so today was painful. The market rallied, including after hours, like 4% from the lows of today, where it was down about at like 2:30 when Jerome started speaking. The first one of the questions, wasn't very positive, and so the market dipped like negative almost 0.8% on the NASDAQ, and then rallied immediately like 3%. That's like a 4% rip within an hour. I lost $100,000 in an hour, so that was painful, stressful. And I'm reminded again on days like today why we can't time the market. I think that the fundamentals do not support this recession being over. The market's basically pricing in that the Fed's going to U-turn by the summer. And we have 2 more rate hikes coming still. And he said that today. And I'm like, were people not listening to the same speech I was? It was neutral. He towed the line, but it was like clear that, I will say one thing. I did notice that today the language was very much like he's not giving up on the fight on inflation. They will continue to hurt, continue to raise rates. So that was good. I like that language. I would much prefer that to the wild scenario of taking a break or lowering rates a little bit. That'd be dangerous, right? If they were to take a pause too early, if they let rates kind of come up a little bit, or sorry, they let them come down a little bit, then that would relieve pressure and would potentially allow inflation to have a second wave or become sticky or get a price wage spiral, which we don't want any of those things to happen. So anyway, I'm still short. I just don't see how the market can rip straight up. And how high can it go? How much more upside is there right now? Like when we have a 13% rally month, by the way, we haven't seen this strong of a January since 2001. And by the way, when we had a 10% rip up in 2001 on a 30-day, the first month of the year in January, it's the strongest year-to-date performance we've had in more than 2 decades. You know what followed after that was a 35% correction. Not that past predicts future, but I don't see how much further of a rally we can have while they're continuing to tighten. They're still raising rates. He said rate hikes, as in more than one to come. And they asked him directly, does the council think about, pausing, or potentially someone asked lowering rates? And he said, we're not even considering that right now. It's like the market is still pricing in that rates are going to come down in the second half of this year. That's not happening. We won't have a low interest rate environment until best case scenario 2024. It takes time to bring rates back down. And if they bring them down too quickly, then we're going to have inflation on a second run. Be basically exactly what happened in the late 70s, early 80s, where it took a decade of battling inflation. And we had, took 19% interest rates to get things under control. The way that they're doing it now, the fastest rate hikes we've seen in history in such a short amount of time, we've never seen interest rates rise this fast ever. I didn't think it would even happen, to be honest. But then the government, through COVID, printed more money than I ever thought was possible. And I thought, okay, this is gonna end up in catastrophe. And it did. And now this is the direct result. They'll blame it on COVID, they'll blame it on, the war, they'll blame it on supply chain issues. But interestingly, in today's report, they dropped off the talk about the war, they dropped off talk about COVID, they dropped off talk about supply chain issues. So now they're saying basically the main causes for the inflation they're saying are gone, and then inflation, we're now entering a disinflation. So basically the opposite of inflation, where prices are falling. In some sectors, that's true, and it's directly correlated to what they're doing with raising rates, right? So that's something that is good. We want to see inflation come back down. I would like to see some disinflation. That would be painful if they overcorrected. If there's a point where this would crush earnings for companies. You gotta remember that we had inflation of like 10% over the last 18 months. And so that hasn't corrected. We're getting inflation, the rate of inflation change is dropping, but we had 10% inflation. In some areas, we had, I think in some areas we had 25, 30% in some grocery areas, things like that. I just think, someone jumped in here, good thing you sold Meta there, a buy from Jim Cramer. After hours is up 20%. So I bought Meta at $90 a share with option contract discount, around $90 a share, and I sold it at 120. So I made some money, but I am so disappointed. I sold it because of a refinance and some other stuff going on. I needed to free up cash for some real estate stuff. I wish, and now I have the cash back again. And it's like, well, what do I do with that? I can't buy Meta at $185 a share. Tomorrow it might even peak at $200 a share. We're talking from $90 to $200 in 45 to 60 days. Like, we're talking 100% gain. Tesla, 70% gain. The NASDAQ, on average, 13%. You have big names like even Amazon's up like 30%. That's not healthy. That's a bear market rally, in my opinion. I think there's more pain to come. Whether we, crush through the bottoms we saw in October, I don't know. We would need another black swan catalyst. So another example of that is like, let's say that all of the NATO countries continue to fight this proxy war against Russia, effectively against China too, because, Russia's greatest ally is China, and the US hates China, and they're afraid that China's going to overtake them economically, and they will. That's a fact. That's going to happen. But, again, something with, a threat of nuclear war, which Putin has already threatened effectively. But a more serious threat of that would be a nice catalyst. Not that I want that to happen, but that could drag things down. I see, and I get like that, if anything, I'd be cash right now. I wouldn't be buying the dip, I'd be selling the equities that I had. And I'd be holding cash, waiting to buy the dip, because I think there's not that much more upside. We're on a tear right now, and how much higher can this rally go? Fundamentals don't support. We had 0% effective interest rates, and the discount rate on valuations for companies was based on a very low interest rate. We are now at 6, 7% interest. That's a totally different environment than 0%. That's 3, 4, 500% higher, which means the valuations on these companies needs to fall. As you raise the hurdle rate that you need, when bonds are paying 6 to 9%, you now need to value companies' cash flows differently. And I think it's a very possible scenario that in the next 2 years, we still battle higher than 0 interest rates. And so when we see the P ratios turning back to where they were last year, we've reversed all the losses that we had of this, almost all the losses, not all of it, but most of it that we've seen this recession, especially in the last 6 months. All that dip is gone. And so where's the upside? I don't see it. I see more downside possible, a really high risk of downside. Would I short right now? I am shorting. I have a pile of cash and I'm shorting. I shouldn't be shorting because today was painful. I lost 6 figures today. The last 2 weeks have been painful as I continue to increase my short position. I went from long to neutral at 280 on the QQQ, and I continue to add short positions, including today, where I added to my short position again. I wished I added to it now or tomorrow instead of earlier today, again, because the market's moved 3, 4% up. So that trade has been horrible. We shouldn't be trading, guys. Like, trying to time the market is very difficult. There are very few traders who, especially if you rely on technical analysis, TA is the least reliable way to value stocks. It's all of the TNA models, technical analysis models that I've seen have failed over a 25-year period. Whereas like a value investing type of approach where you actually are looking at underlying cash flows and the balance sheets of companies gives you a much better return on investment over the long term. Is much more stable and predictable when it comes to long term, I guess, investment mindset. So remember, be long term, guys. Learn from my mistakes. I'm staying short. Just don't do what I do, but I'm staying short until I see a correction. I probably, as the NASDAQ drops another 10% from where it is, I would start to buy again. So I think that, who knows, right? But I think they're overvalued. I don't see that, if you have one of the strongest year-to-dates we've ever seen, I think we're going to see a pullback. Like the January is the strongest January we've ever seen. I think February, March, April might not be so great, especially March. I think it's going to be just bad earnings might come out. Then again, like we've had some good earnings are delayed, right, by a quarter, and we had really good inflation, really bad inflation, but really good for earnings, right? If the price of everything's up 10%, that should translate to people being used to spending more for everything, and that would translate to higher sales and should be higher profits, right? Assuming that the cost side hasn't increased substantially. And usually for tech companies, as an example, wages, there's actually downward pressure on tech wages right now. So you'd think their cost base would decrease. How much is ad revenue falling? Well, Meta just dropped earnings and their ad revenues are doing well. Revenue is actually up. Profitability is down. We expected that. There's a bunch of layoffs coming. Again, I do think that all these layoffs are going to translate into real estate. They're going to translate into business. They're going to translate into the stock market as well. When you lay off tens of thousands of high-paid workers, that's a problem. And that will trickle down and cause problems. However, at the same time, I'm cognizant of the fact that, historically speaking, the stock market bottoms before the economy bottoms. So the bottom of the stock market is usually sometime before the worst of the economy, because the stock market's forward thinking. I think they're a little too optimistic. I think that at the same time, there's a lot of companies that are bearish right now. There's a lot of short positions. They're having to cover now because this market rally, myself included. I'm going to stay the course. And at some point I'll switch to long again, and I'll probably just DCA and not look at it. But I've got to see this trade through. I'm not capitulating. I'm not backing down. And that sounds stupid. I have no stop loss. I'm going to hold this short until I see a correction. I might be holding it till June. But I think we will see, like the QQQ is the stock that tracks the NASDAQ that I track the most. It's up like over 13% in the last 30 days. And that's a huge rally on the month. Maybe we have a 17% rally. That'd be a crazy month, or a crazy month and a half, I guess. Not unheard of. It's happened before. But I don't think we're out of the water yet. I think the minute that the Fed stops and starts its rate declines is when we have a different conversation. That's when I think we can be more bullish. But even then, if they do that too soon, if that happens at a March meeting and they pause, or they start lowering rates in the summer or into the fall, one of those meetings, if they decide to start lowering rates back down, that could spiral things back into another inflationary boom, right? You don't want equities that hot. The question was touched on today with Jerome, and it was like, are you worried about the fact that equities are rallying right now? That they're able to, when markets are rallying like this, you can raise capital really easily. That stimulates business and stimulates growth. We have strong economic numbers right now. The jobs are growing, not great jobs, but the jobs numbers are growing. So there's a strong economy, and there's one possibility that the Fed actually lands between the rock and the hard place. Remember I talked about that last year? I was like, they're trying to land a plane between a rock and a hard place, which is like, full economic recession and like raising, inflation out of control. And they've got to try not to crash the economy or let inflation get out of control. They got to get right in between those two things. It seems like they might be able to engineer a soft landing, but there's still a lot of different metrics we need to see. It's trending down, which is good, but all we need is one bad report. All we need is one bad meeting and things could turn. One bad catalyst. So would I say I'd be all out, on margin right now long? No. Next 5 years, for sure, I think there's huge upside. But in the short term, I would say I'm nervous. I'm nervous to be long. And I think if you have shares in Meta tomorrow, take some profits off the table. When it rips up to $190 a share tomorrow, take some profit on your Meta. Get back in. There'll be a time to get back into the company at a lower discounted price, I think. So many things, right, to think through. Jonathan says, hello. Hello, Jonathan. Stickman Finance says, do you think Meta will come down again? I think there'll be an opportunity. I do think there'll be an opportunity to buy in at a cheaper price than tomorrow's highs for the stock. It's up to like the highest in 9 months. So it's a huge rip. I think, again, almost 100% rip up from its bottom. That's a 100% growth. It still has more upside for sure, but I don't think we're there yet. I don't think we should be pricing in those euphoric all-time highs quite yet. We're not out of the woods. Job layoffs are just starting, and this recession, I think, is going to be more of a slower comeback with several waves, so to speak. So I don't think it's going to be like a V-shaped 2020, the COVID crash and recovery. It's not going to be the same. It won't be as fast. The time it takes to bring rates all the way to the, I guess you're going to correspond as rates rise, the market drops, should. And what you should see is that at that turning point, that the market should be around the bottom somewhere in that time. However, everyone knows that, and they're trying to predict the bottom before it happens. So I don't think that, I don't think we've seen the bottom yet. But again, even if we have seen the bottom, even if October was the bottom of the stock market, and like no one knows the bottom for sure, right? But even if it was the bottom, if you look, oftentimes in a high inflation, high interest rate environment like we've seen now, there'll be multiple troughs that get close to the bottom. So we might be in a rally now, but we'll have another pullback that maybe won't touch. I think the QQQ NASDAQ hit like 253 or 254 as the bottom, or 252. We might see 260 as the next bottom, which is a great buying opportunity. Buy the QQQ at 260. Don't buy it tomorrow at 305. I mean, you can, and over a 10-year period, you'll win. Over a 5-year period, you'll win. Dollar cost average into the market, and long-term, the market always goes up. But if you're trying to optimize returns, I would say buy on a red day. Don't buy on a green day. Don't get caught up in the euphoria. At the same time, like, I can't close my shorts out. Not on a plus 3% up day. I gotta wait. I wait for an opportunity to do that. And I haven't seen a couple of consecutive down days since the start of January. And so I'm just waiting for the next, trough in the natural market volatility. But to the next question here. When do you close your most recent acquisition? So our most recent acquisitions here in Florida, we closed that in about a month and a bit, a little over a month. So hoping to move closing up. That would be great to get another one banged out. This is the thing I love about real estate, though, is like there's no volatility or variability in the price of the real estate property. I can hold that over a 5 or 10 year period, and literally I don't even think about the price. When I check out my stock portfolio, all I do is look at the price, and it is mentally tiring to look at your stock portfolio and to not want to trade on it. With real estate, you can't. There's no liquidity. It takes months to sell it. By the time you get a liquidation event, you're like 30, 60, 90, 120 days, depending on the closing you get. It can be 4 or 5 months. So you don't, with real estate, I'm going to hold it for 5, 10 years. I don't look at the price of it. It's a cash flow positive asset. I hold it over the long term. I always win. And so that's what I like about real estate, is that, like, one, it works well with my mental style. 2, I can get my hands dirty and increase my returns. I can't get my hands dirty and sit down with like Zuck in one of the meetings and help them with cost control. I can lean into my portfolio, and I can find a way to get a renovation done for half the price. I can lean in and add value. And so that's a way, like, if I have spare time and I want to increase my return, I can take my return on a real estate asset from 25 to 35% just by putting my time in. I can increase that return by decreasing expenses, or I can focus some time on optimizing my Airbnb calendar, and we can raise revenue. So I can put time in, because it's a business, I can actively touch and feel. Not only is it tangible, but I can shape the reality of the results. And so I'm investing in me. And when you invest in yourself as an A player, you have a much better return than investing in someone else. So again, that's just another reason why I like investing in business that I can control, and real estate specifically. Even in times of like we've seen with these big declines in real estate in Ontario specifically, where like we had 30% pullbacks and 40% in some areas from the all-time highs. We in real estate, I don't think we're going to have the same fast recovery. I think it's going to be a very slow recovery, which is good for doing business, because once it stabilizes, I can make money. But in a bounce, where there's like a further downward pressure, if there's too much downward pressure, if you buy really smart in real estate, you can mitigate any losses. But in the stock market, you can use option contracts to maybe mitigate loss a little bit. But again, you're beholden to the market, and it can be irrational. Like today's news, I don't think was that positive. Not positive enough to rally, to take the NASDAQ QQ above 300. To take, like, the SPY is well over 400. It might push 410, 420. That to me is like irrational. I think we should be well under. This is a really big bear market rally, and it sucks that I'm short. I wish I was just sitting in cash and not short the market, but I'm short, and I gotta hold that through and see it through. In real estate, I don't have that same. I don't trade it. You know what I mean? I don't trade real estate in the same way. It's harder for me to do because it's not liquid. And I can get in there, I can arbitrage and get value where I can't in the stock market. So that's part of why I love real estate, and part of why I'll continue to have real estate in my retirement portfolio forever, I think. Because as an asset class, it's stable, it outperforms, and I can lean in when necessary. So I just can't generate those kinds of returns in the stock market. And I don't think that anyone really could generate the types of returns you can get in real estate by leaning in on the small scale. Now, if I had like $1 billion in capital, it'd be very hard to get extraordinary returns in real estate because, again, everything's outsourced. So your cost base is high. You're subject more to the market fluctuations, and it is what it is. You can get in there and negotiate some, but you know, at a certain size, you can only go. There's only so many unicorn deals. If you had a lot of capital, then you can't. There's not enough deals to satiate that. So, Stickman says the Fed is so incompetent. You know what? They've actually been doing a pretty good job recently, until they flip flop. They've been doing a good job recently with managing, I think, investor expectations. I honestly think that their approach to continuing to, despite the fact that inflation is coming down, they haven't pivoted yet. They've continued on their mission. They're going to continue to increase rates. That's good. Bank of Canada stopped and said we're pausing. That's stupid. I think that the Fed's actually do a better job than the Bank of Canada, in my opinion. Now, there's a whole other crisis this summer where like there's a debt ceiling, and the U.S. can just continually, you know, increase its own debt ceiling and be like, oh, we're gonna just give ourselves a bigger credit limit, and so we don't default. And it's like, well, then what's the point? You know what I mean? Like, it's just, I don't know. We'll see what happens this summer, but more than likely, the Republicans will come together and they'll just increase the debt ceiling again, and nothing will happen, and they'll not fall off a fiscal cliff because they'll just issue themselves more credit, right? Yeah, so we'll see what happens. I am very confident that we will see a dip below the current price we're at now. In the next 3 months, 100%, we will retrace some of this. Will we bottom out? I don't know. I'm losing confidence that I don't think October was the bottom. I think we still have more pain to come, but it's possible. It's possible that we avoid a major recession, that we somehow land between the rock and the hard place. It was an improbable scenario. It may take 3 years. So it's a slow landing. You know, there's 3 years of pain where rates are high. 2022, 2023, and 2024, I think rates might stay high. So for 3 whole years, we might be battling inflation. But yeah, it's, I don't know. It's natural. The natural movement of the market will be human psychology. Will get it so that the rallies are bigger, highs, and the lows are bigger lows. And so when people get excited and euphoric and they jump on the growth train and like the recession's done, woohoo, like let's go. And everyone's getting on the growth train. Next week I'll come to you guys and there'll be a down day. Like we'll probably be at a lower than, what are we at now? I think aftermarket we're like 304 on the QQQ. Let's check next week and see if we're still over 300 on the QQQ. Again, short term, I have no idea. I'm just speculating. But long term, I know for sure it'll be higher than 304. Medium term, again, I think there's downside coming. Short term, I have no idea. Medium term, I think the economic fundamentals are like, there's pain coming, real pain. In the real estate sector is like 40% of all capital in Canada, as an example. So like real estate collapsing has major economic waves that we're going to feel. And to pretend that we're on this boat and that everything's all good and we're headed to our destination, and Jerome's like, yeah, like inflation's coming down, there's more rate hikes to come, and everyone's like, oh yeah, but like it's gonna be fine, we know where we're going. The market is pricing in, by the way, that rates are gonna come down this year. They're not. Rates are not coming down this year. I don't think they're coming down this year. I think 2024, January, we start getting some action down. By 2025, with any luck, we're back to where we were. So 2022 to 2025 takes 3 years from the tightening to the loosening of fiscal policy. That's my prediction, and it's ever evolving. There's also the real possibility that they screw things up and we battle inflation for half a decade or a decade, right? There's also a real possibility that they break the market and they start stimulating. There could be, if they stimulate, inflation's gonna run rampant again. If they start stimulating or they let rates up and they stop being, so hard with us, and every single meeting he's like, increase. They stop and they start easing up and giving people a break, people will buy again. And so we need pain for there to be a decrease in inflation. Anyway, my thoughts. Ghost Recon, how you doing? William says, evening, Mike. It's painful if you're short. I sold options on Carvana and Bed Bath & Beyond. I still think Burry is right. I believe in Burry. Hashtag believe in Burry. I have buys in if memes get too crazy, no worries. You know, William, I think that I'm with Burry to an extent. I think that he's a smart guy, and I think that there is some truth to what he's saying, and there is a real strong possibility of further downside. So even if I'm bullish, which like long term, I'm actually a bull. So like if you ask me what the stock price is going to be 3 years from now, 5 years from now, I'm straight up. I'm like, I think there's so much potential. I love to be an optimist. I love the growth. But like short-term fundamentals don't look good. The economy's not in a good spot. Businesses can't thrive. The government is just, it can't even service its own debt interest costs. Like there's real problems right now. I think that there is pain to come. I think all we need is one kindling on the tinder and boom, it's gonna go. So that's a real possibility. So if I was gonna be long right now and I had equities, I would protect myself by buying puts like 6 months out from now and buy them way out of the money. Like I'm talking like puts like 50 cents a contract, something that's like 10, 20% out of the money. But then if it does fall 10 or 20%, those go 1,000% return. So there's a book called The Black Swan. It's a great book. It talks about consistently like having an equity long portfolio, but consistently having a short position that's way out of the money. And so if something like a black swan event happens, you get paid big. But if the market drops 10% or 15% or stays flat, you get nothing. So they're just like insurance, basically. You put, say your portfolio return is 10%, you take like 2% of your return every year and you just throw it into these black swan puts. And they're there for like if the market does implode, you've got a huge bag of cash where you can close those options out and then average down on the dip. And so that's something I think that is a sound strategy. I wish I practiced a lot of what I preach. I get emotional with my own portfolio. I'm like, I'm stuck in this shorting mentality. And so until I see this short through, I probably have some bias going on right now. I'm going to stay short until NASDAQ is below 275. The QQQ is below 275. That's the level I've set for myself. I will see that through, or I'll capitulate. We'll see. Okay. Fast gain, fast pain. I wish it was faster. 3 years is a long time to go through this cycle, but RM Field says, good thing you sold Meta. They are a buy from Jim Cramer. You know what? Despite I often disagree with Jim Cramer, and I think that there's a fund that's like inverse Jim Cramer, and it's actually doing fairly well. But, I love Meta. They're a great company, and I think you're being sarcastic. I hope you are, or facetious. But I do think Meta is a great company. I wished I hadn't sold all my shares in Meta. Timing was such that when I dumped my shares around 120, I was like, I'll be able to get back in and probably in the 120s. I was wrong. I'm sure there'll be a point in the next year where I'll be able to get back in. It's not going to be tomorrow. I don't chase the train straight up. I catch the train on the way down before it runs up again on quality names. I'd rather buy on the red days than the green. Will says, good evening, Mike. I agree. Hard to see much more upside in this market. There probably is some upside, but I think there's a lot more downside risk than upside. So if I was going to get into the market, I'd be heavily covered calls, protecting my equity positions, or I'd be buying puts way out of the money to protect against those black swan events that I think any of them could come. Ghost Recon says, trading is a pain. I'd rather buy and hold. 100% right. You shouldn't be trading. You should be buying and holding quality names, quality companies, be diversified on a large portfolio of many different stocks. That's the key. In the short term, do you think depreciating value of the dollar is causing share prices to be driven up? Is the dollar really depreciating a ton? I mean, relative to the Canadian dollar, the US dollar is way up. And relative to many currencies in the world right now, the US dollar is quite strong, actually, and it's been gaining strength this year, like 10 to 15% strength. So it's been gaining a lot of value. But you're talking about just like inflation and the value of the dollar relative to goods and services. This year is an anomaly because the US dollar has gained a lot of strength. It was weak before at 122 to Canadian dollar 1, and now it's like 136, so like a 12% rip up. In some other currencies, we've seen 20, 30, 40% strengthening. So the US dollar has held strength. In times of recession, the US dollar tends to be a place people park capital for now. That'll change once the US is no longer an economic superpower. to the same extent that it is now. I think over the next 10, 20 years, that's possible. There's a shift. Aiden says, evening, Mike. Evening, how you doing? William says, be careful, the market after midterms tend to rally strong until April 15th. There was a Bloomberg article somewhere about this. We may be waiting a while. Hard to say. Like, there's so many different rules and like the sell in May and go away and all this kind of crap. Like, I don't know if like you can rely on any of that. All of those rules, they go away. You know what I mean? They get broken. So don't rely on any one thing. I think more than anything else, you should look at fundamentals and like economic reports. But yeah, it's very possible that I get destroyed. I should set a stop loss. Alan says, hey, Mike, hypothetically, how do you calculate intrinsic value of a company, local business for sale? Okay, she's talking about like a private business. When you look, you know they cook their books to pay lower taxes, but they tell you 2 to 3%. Well, that's a whole different situation. You'd have to go and physically audit their business to know, right? Like if they're telling you the revenue is much higher and they're committing tax fraud, I guess, be careful buying that existing corporation. I would just do an asset purchase, not a share purchase, first off. You don't want any of the liability. So just buy the assets and set up a new corp. But if you wanted to validate those revenue transactions, just sit there, you know, and like watch as revenue happens. You know, you can set up a camera or talk to employees there. You can go and physically, if it's a big enough business and you're serious about putting a good amount of your net worth into this business, go and sit there and see the transactions coming through. And you'll be able to see if it's like a, you know, coin laundromat as an example. You can check when they empty the machines and see the actual amount that they're getting, right? If it's a lot of cash, you can count that cash and then you'll know. But don't pay for what isn't there, Alan, to sort of sum that up. I would say you don't want to pay for something that isn't claimed. So if they are wanting a good price in their business, they should be claiming and paying some tax. That's part of, you know, that's part of getting a business ready for sale. Joseph says, hi, Mike, hope you've been enjoying your vacation. It's been more like a workcation. It's part of life, really. Like I just live down in Florida in the winters. Hope you're enjoying things. Do you think now would be a solid time to start picking up some properties and burring? On the real estate side, we haven't seen a huge tick up, a little tick up, but not a huge one. So I would say, you know, I would definitely say that there's opportunity right now in the real estate space. We may have another year or so of downward pressure on real estate. Real estate takes longer to correct than stocks because, again, what I mentioned at the start of the stream, the lack of liquidity, it takes longer for things to happen. So if the market does drop, it might take 6 months for someone to go through the psychological process of recognizing the fact that their property has dropped in value. And so that's something you have to wrestle through in, you know, in part of the selling process, part of the seller's mindset as they accept that prices have fallen. So real estate takes a lot longer. Whereas like stocks are the opposite. Like everyone's just panic selling. And so instead of a 1% natural drop, there might be a 4% drop. Also, just circle back to valuing businesses. The way you do that is you look at earnings and you adjust earnings. So you adjust for owner salaries and adjustments and all that stuff. And that's how you would be able to value the business based on net earnings. Okay. Are burrs harder to pull off during a declining market? Sure. Yes, they're more difficult to pull off for sure. The downward pressure sometimes results in the appraisal not coming in as well. It sometimes results in capital being trapped in the property. Alex says, do you like sanding and refinishing hardwood floors or put laminate on top? It depends. For the most part, we just go over top. It's difficult to sand them well and to do a good job at it. And it's as expensive as getting new floor on top. So I would say just go with new luxury vinyl plank. I don't do laminate, I do vinyl plank. It's water resistant. Pepe Sanchez says, sounds like you're coping. I'm coping. Earlier today, I was very depressed. Losing 6 figures in an hour was, yep, I was short 2 to 1. So as the market reps 3.5%, that portfolio is dropping 7%. I'm underperforming the NASDAQ by, so the NASDAQ's up 13% year to date, a little over 13%, I think. I'm the inverse of that, 1.5 times or 2 times. So I'm like down like 20% on that portfolio that's shorting. That's not true entirely, actually. I had long calls until the NASDAQ is about 280. So the first half of that 13%, I was long. So I was up 7%. The last 2 weeks, I've underperformed the NASDAQ, the inverse of it, with some leverage. So yeah, it's been shitty. Matthew says, the flow is looking fast. Mike, curious on your take of joint tenancy or tenants in common. Have a family member who's curious on taking a half stake in a property. It depends. talk to your lawyer about the best way to do it. In general, I would say get on title. I think it's a better way to do it. My lawyer has typically always done joint tenancy, I think. I'm trying to think through that. No, the way I typically would JV would be I would set up a corp, they would set up a corp, we both go on the thing together, or we'd set up a corp together, we both own shares in that company, and that company would buy the property. So there isn't really, in that case, like where you're using one corp to buy the property, and you guys share that corp and that liability within that corp. It's easiest for tax purposes, easiest for bookkeeping. But in that case, you wouldn't have multiple people on title because there's just one corp on title, and then the ownership would be split at the corporation level by shareholder. But there's liability pieces too, right? If it's family, then that's a different situation, right? Raz says, my mic. How are you crossing the border? Are papers required? No. When you drive over, there are no papers required at all. I have the papers, but for people who don't have the papers, I know lots of people going across. When I went across the border, I've been 3 times, 4 times now. They don't even ask. Why are you going down? Oh, we're going for a vacation. Okay, have a great trip. Hey, thanks. Bye. Drive right through. So there is nothing at all for driving through the land border. No one cares. It's not even a question. And the ArriveCan app that everyone hated, they scrapped that too. So coming back into Canada, they can never refuse you because you're a Canadian citizen. They can't stop you from entering your own country where you live. But yeah, so going there to the US, no problem. Coming back, no problem. Even for friends of mine that are unvaxxed. Stickman says, Mike, why do you short? Why not buy and hold? It's a great question, Stickman. And I asked myself the same question. I'm like, I'll be long, and then I'll just, like I was going long, and the market just got irrationally hot at like 280 something. I'm like, why are we rallying right now? And then it kept rallying into 290, and now we're into 300s. And it's like, why? To me, there's just not a good catalyst. It's like the Fed coming out and saying we're going through, some disinflation right now. We haven't beat inflation. We're not out of this recession. The fact that like rates are still going up, we're gonna have more hikes into March, potentially into June. They said hikes, more than one meeting. The next meeting's in a month and a half, and the next one after that. We're talking multiple meetings of more pain to come. So we won't even know the bottom of this pain until the fall. That's when we start to feel what they're doing now and what they're doing in March. We're not gonna feel that until the fall. So we're not gonna feel the pain yet for a while yet. So we may enter disinflation. I think that it's a whole situation where there's just so many risk factors. And disinflation is really bad for earnings. So if they overcorrect, which they might, again, they're rocking the hard place. There's real probability likelihood that they'll fuck up one way or the other. And when they do, which they will, something will happen, I'll be there and I'll be short. So that was my thesis, was like, I'm just gonna wait until I'm ready to buy the dip. And I'd rather be short than be in cash, which was stupid. I should just sit in cash and wait for the time to be right, or sit in bonds, make 6%, and then you're making something and while you're waiting to get in. The reason I don't like bonds right now, though, is because, again, rates are trending down, and I think the market thinks rates are coming down faster than they will. Does that make sense? The market is pricing in a U-turn faster than I think there will be a U-turn. That's my thesis. But again, I could be wrong. Who knows? Don't bet the whole farm on that. Make little bets. Raz says, who is educating your kids? We educate our own kids. And he said, are they going to public school? So my daughter's enrolled in public school or Catholic school in Canada. Right now, we're taking a break and we're homeschooling. So we believe that we can give her a better education, giving her experience in many different things. I have her working in the business with me. Every night she's doing reading apps and writing apps and math apps. And so, I mean, my kids are young, right? Like two of my kids wouldn't be in school, right? She's 3 and the other one's 1.5, and my oldest is gonna be 7. So she's the only one who's really in school. And grade 1 is like, what are you learning in grade 1? You're doing arts and crafts. We do arts and crafts every day here. So, I mean, that's how we're doing it. So for now, we're using an online learning method. And thankfully, our kids aren't being brainwashed. Because I know, so my kids were at school, like my daughter would come home from Catholic school and she'd be like saying, like, you're a stupid head. And it's like, we don't talk like that in our house. Like, she's learning that at school. Kids are just rude and ignorant. And so I don't know. Part of me doesn't want her to be around most of the average kids in the school system with parents who are wage cucks, who are 8 to 5, have no understanding of entrepreneurship or, some of the core values that I value. And so that's a big piece of it. But 3 kids, it's busy time. Like we need a nanny. We need help. It's a lot. But we're managing. Paul says, hi, do you think Vancouver house prices will drop? They drop a little bit. It's hard because Vancouver is very cash-based. Very cash-based. So they're not as affected by the rates. But yeah, I think that prices should fall further a little bit. I don't see them ripping up anyway. I don't see them coming way up. Flat or maybe a little bit down. Gary says, hi, Mike. Thank you for another great stream. No problem. Happy to help. Sounds like my kids are having tantrums downstairs right now. They're ready for bed. Got 3 of them down there, and they're always fighting, hitting each other. Ugh. Being a dad to 3 kids, oh my goodness, it's not what I expected. But there are many good times, but there are also many tough times, especially when you're traveling and leading a busy life. I should let this stream end and go help my wife with that. Tristan says crypto is ripping like crazy. Bitcoin up 45% since Jan 1. Yeah, it's crazy. It's just rallying. Just rallying. It's a shame because I sold most of my positions, but such is life. I think there'll be a further downward pressure. Sometime this year, there'll be another opportunity to buy in. I wouldn't chase things on the up. I would buy them in the next downward correction. And maybe it won't touch the lows that it did. Maybe it did bottom out last year. But I think we'll touch near those bottoms again, maybe 5-10% off of those bottoms. Say 5% off that bottom, who cares? When we have 50% rip up in the next 5 years, do you care about 5%? No, right? Like, pick the right direction. And the right direction is long-term up and dollar cost average in. Raz says, unfinished oak stairs, sun damage, blah, 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 blah. Yeah, definitely. Those oak stairs, I would refinish for sure. You could paint them too or stain them. Risers or veneers, you probably could. Yeah, you can pretty much bring anything back. Even the risers, you could put like magic eraser board on it, like the stuff that you can write with dry erase on it. It finishes up really nice in the back sides of stairs too if you're painting them. Just as a pro tip, we did that here at this property and it looks fantastic. Brock says, hey Mike, any advice for offering negotiating on beating up a property with lots of deferred maintenance, but with wealthy sellers who negotiate hard and it's not their primary residence? So find a way to make a win-win with them. Right? Maybe they're negotiating hard because they want a certain price. Maybe you give them the price that they want, but you negotiate on the vendor financing. Maybe they say, hey, look, give me a year mortgage on a second mortgage. You guys fund some of the down payment or you guys fund some of the renovations. Hey, look, you give me a $50,000 loan. I'll take this property over. You guys want 400 grand for the property? No problem. I'll give you the 400 grand you want or whatever price you guys can come to, but then negotiating the other terms. You know, like, hey, give me a 0%. Give me 50 grand at 0% for a year. So that when I renovate it, you're effectively covering some of that, right? And I'll pay you back after when I refinance the property. Or you can come at them and say, hey, I'll give you 400 grand, but these are the 10 things I need you to do. And some of these sellers who are wealthy, if you said they're wealthy, then they can afford to fix the stuff. Say, hey, I want a new roof on it. Or I want you to do this or that. And they might be like, yeah, we can get that done. Or maybe you say, hey, look, I'll coordinate the repair for you. So it's no stress at all, but I'll send the invoice to you. I'll get a really good contractor in there at a low price. We'll get it done for X dollars. Get a quote and bring it to them. Say, hey, it's $4,300 to do this. And they're like, oh, only $4,300 to do the roof? Like, I thought it'd be 10. And so you save them money, get them a cheap quote, and wealthy people tend to value that. They might negotiate with you. You give them the price they want. They cover the renovations and the repairs. It's a win-win. So you can get in there, you can negotiate. Sometimes a sticky seller on the price might give on terms or might give on some other area of the deal. That makes it great for you because now you've taken a property over with a new roof. And maybe the repairs aren't so deferred. So there are ways to make things work. Just get creative would be how I would keep this going. Keep short, this will flip. I hope you're right. Yeah, I think that it's very, very possible that it does flip. But I'm going to stay short. Hopefully Amazon shits the bed or Apple shits the bed on earnings. That's all I'm hoping for now. Or just some negative catalyst. I do want to buy the market and I want to discount dollar cost average in and just be long. But I just can't get behind being long at these valuations. Not with the current economic environment. When we're back to 2% interest rates, yeah, I would YOLO into the stocks again and get on margin. But we're not in that environment. We're laying people off into the biggest real estate recession we've ever seen with rates at all-time highs, a government that can't sustain its own debt, and businesses that are faltering, and bonds that are being downgraded. Like we're not in a euphoric bull market, but the market's treating it like we're in a bull market. It's like we're in a bear market rally. This is a bear trap. And anyone buying this dip is going to get crushed when the large funds make their nut for the year. Once the large funds make their nut for the year, if they can get a 25% run, most of the hedges will get out. Be like, we're done for the year. We'll take our 25% and go in bonds. Because you make 25% in the first 2-3 months of the year. You stop, you cash everything out, and you go into bonds and make 6%. Now you're making 30% on the year, 32% on the year. You're 25 plus your 6-7 in bonds. You're solid. You're good. The guys can go have some parties, have some good times. Like and the institutions will take profits at some point, especially given the market conditions. We just need a catalyst to do that. They're going to run it and get a good profit for as long as they can, I think, and make their bonuses are based annual, right? So if they can have a really good 2023, it doesn't matter the last year was shit. If they get a good 20% and they lock in, you're looking good, right? So that's going to be a big piece of it too, I think. There are a number of reasons why I think it could go down. I could be wrong. I've been wrong before, but I do think there is some downward pressure. I don't think we have that much further up to go, but again, you never know. Do you still keep in touch with Matt McKeever? Went to the same uni. I've not seen his presence online much. Yeah, we still chat. It's been a few months since I've chatted with him, but yeah, we'll get on a call, twice a year for a couple hours and chat and shoot the shit. But yeah, it's been a while since I chatted with him. I should shoot him a message and see how he's doing. He's living the dream, living the early retirement, off-grid dream. He's a little bit in the rabbit hole, but I think that he's found more happiness, I think, doing that than what he was doing before. And so I'm happy that he's happy. Sometimes I envy that disconnected, happy lifestyle where you're not sucked into, social media and sucked into, even in real estate in general. Like when you're running a business, there's a lot of stress, day-to-day stress that you deal with, right? And it's part of it. It's part of growing aggressively. But part of me sometimes wonders if I should just slow it down and go more into maintenance mode and defense mode as opposed to growing so aggressively, especially on days where it's stressful. I'm like, I need to take a week and just chill, or even a few days and just chill. But then I take those days and I'm like, I'm ready to go again. All right, guys, I gotta wrap the stream up. Thank you for watching, everyone. I appreciate everyone who's tuned in tonight. And for those people watching the replay, hit the thumbs up button. I'd appreciate it. Drop me a comment. You guys know where to find me. If you need to find me on Instagram at Mike Rosehart or Facebook, Mike Rosehart, or at rosehartcapital@gmail.com. Or where else can you find me? On here in the comments, I guess, too. So anyway, the secret to unlocking a wealthier you is 3 levers and control your financial future. Spend less, earn more, and maximize returns in the difference. See you, everyone. See you next week.